You're a parent with a student at the University of Guelph, and you're trying to understand if purchasing a Guelph student rental property is right for you. I'm here to provide in just 5 minutes a simple cash flow analysis to try to make that decision easier. This property was live on MLS just about 2 weeks ago, 17 New Home Drive. It was purchased for $1,135,000, and we've made some assumptions here just based on the mortgage requirements in column J. Just speaking about what that mortgage requirement would be, the amortization, the fixed rate at 4.44%, and the term length of 5 years. This is going to bring us a total monthly mortgage payment of $4,500. And with land transfer tax, legal fees, and a small renovation expense or contingency fund included, that's a total investment, $276,000. So this property had a great location. It was a large lot. You could have had a legal 4-unit added to that property. That's with accessory dwelling unit, 3 units in the home. And again, currently this property was 7 bedrooms. So let's evaluate this as though you have 6 rooms rented at $1,100 a month plus utilities, and your son or daughter lives there rent-free in one of the rooms. So we've got a gross monthly rental income of $6,600. All of our expenses here are outlined in red. Got mortgage expenses, property tax, property insurance, portion of utilities for that son or daughter living in the room, and then repairs, maintenance, and other future expenses totaling right around $5,000 a year. So again, looking at this from a cash flow perspective, we've got a net operating income after all expenses of just over $8,000 and a monthly cash flow position of $668.60. So again, this is a 7-bedroom home. You've leased 6 bedrooms out for $1,100 every single month plus utilities, and your son or daughter's living in the home. So if this were to be a 7-bedroom home, we can just make a quick change there, and you can see our cash flow changes to about $1,768 every single month. So definitely a cash cow if you were to rent it out to all students. But let's evaluate this as though you're a parent at the University of Guelph, you're purchasing for your son or daughter, they're going to live there with 6 of their friends, and that's how the building will be evaluated. So just scrolling down a little bit further, we can look at what those annual earnings are actually going to look like. So because you've purchased this property with assuming a mortgage, on line 40, we've included what that debt pay down is going to look like. So because the tenants are paying your mortgage for you, we'll account that in our return on investment number. So that number comes out to $16,310.80. Again, that represents how much principal you're paying down in that mortgage in the first year. In this example, we used 20% down payment on the purchase price. So your total mortgage required $908,000. I'm up here in column J. 30-year amortization of 4.44% interest rate is what we're using. So again, that value in our first year is $16,310 or a 5.91% return on that initial investment of just over $276,000. Our cash flow in that first year again is just over $8,000. So our total ROI, if the property does not increase in value, is 8.82%. Again, because it's a student rental, you've got 7 people living there. There's just things that happen. There's 7 showers on Friday night. There's going to be a lot of dishwasher use, a lot of laundry uses, things like that. So just keeping a bit of that cash in a reserve fund is definitely going to be recommended. So we have that accounted for here, just about $5,000 a year. But this cash flow number, as you're accumulating it, just make sure you're kind of keeping that away in your operating account, just in case things happen. It is a residential rental property for students, so understanding that things happen and keeping that cash on hand is a good idea. But $8,000 a year is certainly a comfortable amount to solve problems. And again, that's why we like student rental properties, is that high cash return number. So over a 5-year period, if this property continues to run underneath these leases and with this debt pay down structure, we're looking at a 44% return over that time period. So the reason we evaluate this based on 5 years is because students migrate, they graduate to that next phase of life, usually 4 or 5 years after coming to the University of Guelph. So another reason that Guelph student rental properties are great is that you're getting a fresh market lease every 5 years. The students are going to leave over that period of time, and you'll always be able to renew that lease with a fresh group of students. So let's look at it from a 5-year perspective. In this example, it's a 44% return, not including any appreciation. If we go down to line 51 here, just in our spreadsheet, we've added a 3% appreciation, non-compounded, over 5 years. So that would bring our total ROI, including appreciation, to 105%. So if you put down a down payment of $276,000 in year one or year two of your child's education, by the time they've graduated, if you have a year or two where you're also managing the property, you've accumulated $291,000 in new equity and new profit in the building. So for us, this is definitely a check mark. This obviously has some assumptions made where capital gains is not included. But just to look at this number, this is going to beat renting by a strong margin. Guelph has such a strong demand for student rentals. So for me and for us as investors, we're definitely looking at these as strong returns, and you're seeing that just in how this is expressed with the spreadsheet. Again, this is a 7-bedroom home, so we're evaluating this as though you've bought it as a parent. You've got 6 rooms that are rented, and your son or daughter is living in one of the bedrooms. If we were to switch this really quickly to a 7-bedroom home with a gross monthly rental income of $7,700, now we're looking at a gross net annual return of 13.6%. And we see that climb over a 5-year period to 67.99%. So really strong investment here. It's one that I think most parents should be considering if they are coming to the University of Guelph. And again, why we love these student rental properties is they mix really well with single family homes. So you're seeing that single family home appreciation along with that student rental property cash flow that allows you to solve the problems and hold that property for the long term. Thanks for watching, guys. Definitely appreciate the time. If you have any questions, please feel free to reach out. My contact information is below at tdh@cbn.on.ca. And for sure, if you like this video, please subscribe. It encourages me to continue to make these videos. And all the best, guys.